What can we expect to see in the market next week? In this video, we're going to be looking at some of your favorite tech stocks, and we're going to be looking at where exactly these are going to be moving by looking at some key indicators. The previous week was actually relatively bullish despite it having a bearish start. So where can we expect this stock market to move next week? So starting off with Sofi here, we can see they had a really good week last week with a short position opening on the MACD trend lines along with a long position opening up short after. With them getting close to the resistance line here, it could be a stock which will potentially reach it next week. Will it break through? It does actually have the potential with the current momentum. With this only being over a week away from the earnings report, it will definitely be a stock to watch next week as earnings are estimated to be quite good. With Sofi securing a £525 million deal, this shows continued demand for this stock. We are, of course, well above all of the trend lines, so again, this is looking relatively bullish for this stock going into next week. But, of course, this could start to see a slowdown as we do meet up with resistance. And looking on a 15-minute chart quickly, we can see here we are actually in a long position now, and momentum seems to definitely be on the side of Sofi. Of course, this could reverse when the new week rolls over. So now we're going to move on to the next stock. And the next stock in general is Symbotic. Now, Symbotic is a stock in which I have been very bullish on recently. I actually have done a recent analysis on why this stock is currently massively undervalued, with the intrinsic value being at $32 to $63. We are currently now at $30. So we are just under the intrinsic value on the low end. So there is still potentially room for growth. However, if you did get in last week when I did say, then congratulations, you've done very well off of this. As of yesterday, Symbotic has jumped massively after agreeing to acquire Walmart's advanced systems and robotics business for $200 million in cash. This essentially saw their stock absolutely soar in the late hours of Thursday. We are now seeing this go sideways, of course, which is exactly what you would expect. To be perfectly honest, I actually expected this to come down. I do think we are going to see a short position open here. It's just sod's law, really. It's going to happen, but I'm still going to be holding this stock. I'm going to be holding this stock for quite a while. I do think this is going to be a really good stock for the rest of 2025. Of course, with that news coming out yesterday, we are massively above all of the trend lines. And when we go over to a daily chart, we are actually now catching back up to the 200-day moving average. And if we don't actually see a lot of selling pressure in the next coming week for Symbotics, which I am personally expecting, I don't think we're going to go back down to the levels in which we were previously, but we might see us hit around the $28 mark. But if we don't actually see a massive sell-off, we will see these MACD trend lines here switch over positions, entering into a long position. This is where a lot of big hedge funds will start buying into this stock. So investment bankers will definitely be keeping an eye on Symbotics at the moment. And of course, with this being above a lot of the trend lines, we can expect to see a lot of engagement with this stock anyway. So now we're going to look at Palantir. Palantir is just a very confusing stock. It is currently massively overvalued, with its PE ratio being something ridiculous like 356. And its intrinsic value is around, let me just check, between $4 and $8. Currently, so obviously it is currently massively overvalued. Despite this, it defeats all odds and just continues to grow somehow, with actually having a lot of resistance with it in it at the moment. As of the week before, we had a lot of selling pressure, which I thought was very natural, but all of a sudden we've had a lot of buying pressure for Palantir. So it's really hard to predict for Palantir. So I think the safe bet is to say it's probably going to go up. Let's be realistic. With it being above all of the trend lines, the one to watch is definitely the 50. It narrowly escaped here going below it. If we do see it go below, I think we are going to see a lot more selling pressure in this stock. But for me, Palantir is a crazy stock. It just seems to defy all odds and increase week by week anyway, no matter what happens. Of course, it can't last forever. So when will it start to fall? In my opinion, it has to fall in the next couple of weeks. It really does. With it being so overvalued currently, I don't think this is sustainable. I mean, of course, it is a very, very good stock long run. I think in the next 5 years, you're going to see great returns from Palantir, both financially and just within the stock price. But I do think right now it's just massively overvalued. With it bouncing off of their support here, we can just see that the support is playing a very strong role in Palantir stock. With the Sharpe and Sortino ratio currently holding in at 12.82%, it just shows to me that compares risk to reward, and that is actually a relatively bullish indicator. Let's just quickly have a look on a 15-minute chart to see if it is a similar story. So currently on the 15-minute chart, looking at the enhanced buy and sell signals when they would like to load. Just give me a minute. So we are currently in a long position, as we can see here, according to this. Again, this actually looks really bullish, but for me, I just don't understand it. It just shouldn't be going this high with the stock being so overvalued right now. But of course, this stock just defies all odds. So now we're going to take a look at Google, and Google on a 15-minute chart has just opened into a long position. If we go to a daily chart, what is this saying for us? So we are currently in this long position still, of course, with us narrowly avoiding it here on the 4th to 5th of December, and it's still looking to be as if this stock is just going to be long for quite a while. We are, however, now seeing a lot of sideways action in Google stock. So what are the moving averages saying? So we're still massively above most of the moving averages, of course, with us being on the 7-day, which is just what is obvious anyway. But for me, this is just saying that this is still relatively bullish. I think we might see the 50-day moving average catch up in the next couple of weeks. Whether that signals a sell-off, I'm not sure. It could indicate a huge buying pressure in the stock, as investors will want to stay above that moving average. And on a Sharpe and Sortino ratio, we are currently at 11.58%. So now moving on to Tesla. Tesla has a Sharpe and Sortino ratio at 17%, which is actually relatively bullish currently. If we look at the enhanced buy and sell signals, we are currently in a long position here, with us starting to slow down on this long position, as we've seen a slight decline in the price in the last couple of weeks, but obviously this last week has been relatively bullish again. Within the last week, Tesla has seen a notable movement and development, with recent discussions among investors led by Morgan Stanley, which have shifted attention from Tesla's traditional automotive business to its advancement in artificial intelligence, notably Tesla's self-driving technology and AI-driven humanoid robots. These are now being seen as potential growth drivers for the future of Tesla. Along the highly anticipated self-driving robotaxi service and prospective robot sales are key factors that could further elevate Tesla's stock value in the next coming weeks. So in summary, Tesla, along with stocks like Palantir, have seen a lot of resilience in the last couple of weeks, seeing a bullish outturn. With them staying ahead of the 50-day moving average here, we are seeing a relatively bullish outlook for the next coming week. However, if we do see this start to come down, then it could also signal a lot of selling pressure for the next coming months. But of course, it will all be to play for in the Q4 outlook, as of course they are expecting to announce a cheaper lineup of EVs. With their intrinsic value being calculated at $127 on the low end and $237 on the high end, we can see that Tesla stock is currently massively overvalued. However, it's always going to be overvalued, as new investors tend to just buy Tesla as soon as they open up a trading account. They go on their app, they see Tesla, and they click buy because they know that everyone else does it. And there's enough of them to make it a feasible reason for this stock to be overvalued. But that doesn't mean that we're going to see a lot of pressure and we're going to see us reach the intrinsic value, because it just doesn't. This stock's always going to be slightly overvalued. It's just to be expected, and that's perfectly fine. So now we're taking a look at Rivian. Rivian has done really well in the last couple of weeks. It has actually seen a massive sell-off since it did do well about 2 weeks ago. This was due to them actually beating expectations on takt times and manufacturing numbers. But we are now actually seeing this start to bounce back, which is what you would expect. As for the intrinsic value for Rivian is set between $42 and $79, which is just massively above where we currently are. Of course, Rivian is only in American markets mostly at the moment with their vehicles, and there are rumours for them to be moving into European markets. I don't think they will do as well in European markets when they do eventually make that move, but of course it will be a market for them to jump into, as in Europe we don't have any EVs anything like what they offer. The only EVs we have over here are things like Teslas, Audis, some Fords. It's just all the basics. Rivian offers something really quite unique, in which other manufacturers don't offer currently in the EU and other European countries. With there being a potential for a partnership with Volkswagen, as the CEO of Volkswagen expressed an interest in deepening collaboration with Rivian. Potential areas of partnership include sharing modules and combining purchasing volumes, which could provide Rivian with a significant opportunity for growth. Of course, Volkswagen is a bit of a sinking ship at the moment, but this will definitely strengthen ties for Rivian and it will actually increase the value of the stock for sure. But putting news aside, on a daily chart, we are currently massively above the MACD trend lines here, indicating strong buying pressure. If we have a look at the moving averages, of course, we are also massively above the 50-day moving average, along with the 200 and the 100-day moving average, which is a relatively bullish indicator. Of course, we are seeing a lot of sideways action at the moment, so let's have a look on a 15-minute chart, see if it is a similar story. So looking on a 15-minute chart, we've actually just gone below the 50-day moving average, which isn't exactly a great indicator. It could signal a bit of selling pressure in the next couple of days. But from there, I do think we are going to see a bit more buying pressure just due to the fact that I still personally think this stock is massively undervalued. With us here actually starting to look as if we are going to cross into a short position like I just mentioned. It just looks as if we might see a bit of selling pressure at the start of next week. It could even go for the rest of the week. Who knows? And looking on a Sharp and Sortino ratio here, we can see that we have a percentage rate of 8.75. So it's not looking relatively good for your risk to reward currently if you were to buy into this stock. But that doesn't mean to say this stock is going to suddenly drop off the edge of a cliff. I still think this stock is going to do really well long term. And if you do hold Rivian stock, it's not something to be too worried about at all. So now we're looking at Nvidia on a 15-minute chart. Down here in the right, you can see the Sharp and Sortino ratio is currently at minus 2.86. So we're actually expecting this to drop off in the next couple of days, according to the Sharp and Sortino ratio. On the contrary to this, if we actually look at the MACD trend lines, we can see that we are still in a long position and it looks as if we have quite a large amount of room here to still be within a reasonable price. It doesn't look as if these are going to match up at any time soon, but according to the Sharp and Sortino ratio, risk to reward is currently not that great if you were to buy now. Still on this 15-minute chart, if we look at the moving averages here, we are well above the 50-day moving average. We are actually well above all of the moving averages, so that is actually relatively bullish for sure. Now looking on a daily chart, we can see that on the 50-day moving average, we are actually below this. This is very bearish, but if we do see a rebound in this stock in the next week, I think this stock is going to recover perfectly fine. At the moment though, with the Sharp and Sortino ratio in mind, it could definitely go further down, especially with the pressure of this 50-day moving average being above the current buy price. But despite this, on the MACD trend lines here, we are actually still in a long position, just barely. But I actually would argue that I think this should actually be a short position now. But again, it's quite hard. It's quite tight at the moment. It's definitely seeing a lot of sideways action. Obviously, we had this massive sell-off on the 6th of January. And with recent export restrictions being put on Nvidia's products to the US government rivals, it has definitely harmed Nvidia's stock in recent times. But I do actually still think there's still a lot of growth in Nvidia. I just feel as if there always is for some reason. It's a bit like Palantir. It's just this, I mean, it's the largest company, so it's kind of to be expected. So what is the intrinsic value for Nvidia? It is 132 to 251. So there is actually still room for an intrinsic value growth within Nvidia. So I don't think that it's currently, oh my god, it's overvalued, sell, sell, sell. I think it's actually, it does have potential to keep going. In recent news for Nvidia, this is just a bit of a funny story. It shouldn't really have much implication, but Nvidia CEO announced he will not be attending the President-elect Donald Trump's inauguration, opting to instead celebrate the lunar year with his employees, which is fairly wholesome, but it's quite a weird play for the largest US stock CEO to miss the inauguration. So I don't think it will have much implication, but moving on. In response to increasing demand, Nvidia is collaborating with its supplier TSMC to boost production of advanced AI chips. This move aims to meet the surging market needs for AI technology. So, of course, they are currently only meeting, I think it's only 1 in 15 of their current customers. So there's always room for them to grow in their manufacturing capability. But right now, there is a lot of anticipation around the revenue from Nvidia and their new Blackwell chips. And these chips are, of course, being used in their new GPUs as well, which meet a much lower price point for a relatively strong, if not stronger, performance than their old obsolete GPUs now. So I'm going to end the video here. I hope that has been useful. Again, this is to take a pinch of salt with because anything can happen in the market. This is just what the trend lines and what the indicators are saying for the next coming week. So I hope you have enjoyed this and found it somewhat useful. If you have, please do let me know, leave a like, subscribe, and I'll see you for the next video.